Streaming from Oklahoma's own digital studio, this is Dave Davis with Your Money Matters.
We're back for another day of talking about finance. I'm Dave Davis. Your Money Matters on this whatever day you're watching. I'm taping it on Monday here before Memorial Day, but we hope you watch this many years into the future because we think there's going to be a lot of great advice. Now, some of it is going to be topics of the day. We're talking about Moody's downgrading the U.S.'s perfect credit. We're talking about interest rates and inflation where they are now, but also some longer term, as we kind of call them, evergreen topics that I want to talk about with Phillip Mock at 1522 Financial Planner. Phillip and I are going to talk about finfluencers. Have you heard? Financial influencers on TikTok, on Instagram, on your social media of choice that may not be giving the best advice, or you kind of need to parse through, just like with a lot of things on social media, right? Parsing through what's true, what's not, who you get your advice from. So that's going to be one thing we're going to be talking about today, financial influencers, finfluencers. And finally, we're going to end it on gold, as gold has kind of gone up and down the price per ounce. Right after inflation hit in 2022, it went way up. So is investing in gold a good idea? We're going to talk about all of that and much more now with my guest, Phillip Mock with 1522 Financial. Phillip, good morning.
Good morning, Dave. It's great to be here. Thanks for having me.
Oh, we're thrilled here, a local Tulsa company doing financial planning. So tell me a little bit about what you do, and we'll just start there, Phillip.
Sure. I've been in the financial industry for approximately 15 years, and I own a small investment advisory firm here in Tulsa, Oklahoma. We focus on financial planning, investment management, and tax planning for a small group of families. So it's great to be here, Dave. Thank you.
Yeah, so we have a lot of topics, and it's funny because as you were kind of going through the topics, I said, yes, and yes to that one, and yes to that one. We want to go through a lot of different things because of this open-ended format that we have on our digital exclusive. We can do this. So let's start off, news of the day, Moody's downgrading the U.S. credit. What does that mean, and why were we downgraded?
So in the United States, there are three primary credit rating agencies. There's Moody's, there's Fitch, and there's S&P, which stands for Standard & Poor's. And these are the three entities that are responsible for assessing the credit quality of different companies, different governments, different entities to determine for an investor, is this a safe place to invest your money in terms of debt? So in 2011, Standard & Poor's downgraded the United States from the top level to one level below top. Fitch downgraded the U.S. from the top level to one level below the top in 2023, and now Moody's has done the same. So what this means for the average household is there's really no direct impact, but some sort of secondary impacts that are sort of theoretical would be that in general, we would expect to see interest rates in the United States a little bit higher because the risk of investing in the United States from a debt perspective, buying the debt of the United States, which is U.S. Treasuries, is now just incrementally riskier than it was before. We may also see some volatility in the stock market. That was certainly the case in 2011 when we had the S&P downgrade. That one was a little more shocking. This one, there's been a lot of angst about tariffs and fiscal responsibility and our budget deficit for quite some time. So I honestly am not really surprised that we've had the Moody's downgrade, but I'm sure we'll hear a lot more about it in the weeks and months to come.
You mentioned interest rates as well, one of the reasons that we were downgraded. So in terms of interest rates, do you see a cut coming from the Fed? When's the next Fed's decision, and when could that potentially happen where we could see a cut, obviously affecting things eventually like loans?
Sure. So the Fed, they meet throughout the year, different meetings throughout the year. So there's multiple opportunities for them to potentially cut interest rates between now and the end of the year. I think that the most recent economic data to come out in terms of employment and our unemployment rate, it's really hard to predict what the Fed's going to do. And so I'm certainly not smart enough to do that, but I think it's certainly possible they could cut rates. I would say that from what I'm seeing, there is less pressure to do so now from just a purely economic data perspective than there maybe was 6 months ago.
We want to talk about inflation too. We just had the CPI come out, the Consumer Price Index. This is basically like the cost of goods. So, sitting at 2.3%, we're seeing a graphic here, lower than expected. Housing, energy remains high, groceries coming down, eggs, most notably, everybody asking about eggs, talking about eggs for good reason, a staple of our diet. 40% of diners' menus have eggs in them. I mean, that's down 12%. So what is your takeaway from the inflation report, and what does it mean to you and me trying to make our dollar stretch?
Yeah, I mean, the inflation coming down is certainly a good thing for the household. I mean, consumer spending is obviously important to all of us when we go to the store and buy things we need for our households. It's also really important for our economy. Consumer spending makes up approximately 70% of our economy. So it's important not just at home, but it's also important nationally. And what I gathered out of this out of this inflation report was that we've seen some of the hot topics like eggs, for instance, finally come down, which has been, I know multiple people that are now have chickens in their backyard.
Yeah.
They're growing their own eggs. I get it, but I think it's good that we're seeing some normalization there. The other thing I'll point out is energy has actually, in general, come down. So, and for most people in their household, gasoline is where they really feel that impact when they go to fill up their vehicle at the pump. So currently in Oklahoma, the gas price average is around $2.80 per gallon for just regular unleaded. Nationally, it's around $3.18 or so. And that's down from a year ago, about 30 to 40 cents. So we are seeing some improvement on things like gasoline, which is obviously a lot bigger part of our budget than eggs, for instance. But overall, I mean, it was a good inflation print, and part of why I think we may see a little bit of a slower response from the Fed in terms of raising interest rates this year.
Let's talk about finfluencers too. Financial influencers. All of us are either on TikTok, Instagram, Facebook, or we know somebody who is, or our son is, daughter is, grandchildren are. So let's talk about what you've been seeing and maybe some of the potential pitfalls of, getting your advice from basically social media.
Sure. I mean, people have been getting advice from other people on all sorts of different things for a long time. I mean, every holiday dinner, you've got a family member that says, I know what you should do about this or that. And now that's just been extrapolated into a much easier to access form in social media. The concern is that not all of the advice that's out there is accurate, and not necessarily in some cases coming from the best place. So there are some influencers that are sponsored by different products that therefore may have an influence on the advice that they're giving in their social media platforms. But the greater concern is that you've got some people that they may be very intelligent. However, they just don't have the credentials or the experience or the know-how to really give that sort of advice or recommendation to a broad group of people. So the takeaway is that everyone should be a little wary of getting advice on social media and keep an eye out for the credentials of those influencers, what their backgrounds are. Are they a professional in the field? There are resources available online from the Securities and Exchange Commission to be able to look for an advisor and check both their background, their disciplinary history, and their certifications. And that's always a good thing to do before you work with any sort of financial professional, whether on social media or in person, anywhere, anytime.
Yeah, it's important in a lot of careers that we do, as a journalist, vetting people, making sure, how do you know what you know? It's the same question that we ask as journalists of some of our sources and people we interview. How do you know what you know? The why, the how, all those questions. I think it just applies to general life, especially like
Absolutely.
you said, if it's parenting, if it's about babies, if it's about having babies, and even just financial things, anything when you're getting advice from someone you don't know. I think it's just a general rule of thumb there, and that's great advice, Phillip. I kind of wanted to pivot a little bit back to some of the big picture things going on and just kind of putting in perspective. So tariffs, are we seeing those car prices jump up now? Are we seeing them maybe go back down? There was this big agreement that was announced, kind of this 90-day agreement between the US and China. Obviously, China is a big supplier of the US. So kind of, are we seeing the big price jumps that we were expecting when this, we'll call it the trade war, started in February? And then do we see them come back down, and what is kind of that timeline?
Yeah, there's a lot of angst from people about that right now, and understandably so. So we've got several different pauses going on right now. We've got a pause with China that's going to last until sometime in August, and then a pause with most of the rest of the countries until the midsummer, June, July. We're not yet seeing a ton of impact in most products from that, and there's a few reasons why. The tariffs applied when something is imported into the United States. And so, as companies draw from inventory that they already had inside the United States, there's not a tariff applied when it was already here. It's only applied when it comes in. Even once that occurs, companies have a few different choices about how they want to handle it. Some companies will pass it along to the consumer. Some companies will just say, we'll just take less profit. And some companies will do something in between. And so it's hard to know exactly like what the true impact will be to a product's final price. The other thing to consider is that the tariff is only on the goods part of a product. So when a product's imported into the United States, it's really got three components in the price. You've got the cost of the materials it took to make it, the cost of the labor to build it, and then there's probably a profit margin of the company selling it to the consumer. But the tariff only applies to the materials part. So even a 10% tariff on something like an electronic, like a cell phone, may not necessarily translate to a 10% price increase because it's only going to apply to the material part of the product, not the labor, not the profit margin. And even then, the country by country tariffs for where those materials come from may differ. So over time, I think we'll see those prices come up as inventories in the United States come down. Uh, Things coming from overseas, once the tariffs begin to apply, will be more expensive, but exactly how much sort of depends on the product, the company selling it, many different factors. But overall, it theoretically should make things a little bit more expensive.
Finally, I want to end on gold. And I did some research on the CBS Money Watch and talking about, okay, so where is gold trading at now? And of course, we've all seen these commercials on TV. We've done news stories about people trading in their gold. So gold trading at about 3,240 an ounce. That is as of this morning, up from 2669 at the start of this year. And we really saw kind of that gold boom at the beginning of the double-digit inflation era, that 2022, where everything went up and it just seemed like gold, it was an 11-year high is what Money Watch was reporting back in 2023. So let's start with the very basics here, Phillip. So when we're talking about investing in gold, are we talking about buying gold bars and gold coins? Are we talking about speculation like futures? What are we talking about when people say, I'm going to invest in gold, or I want to invest in gold?
It's a great question. And the two most common ways that I see are people actually buying physical gold, either gold coins or gold bars, or they're buying a gold fund. And so a gold fund would be an exchange traded fund or a mutual fund that's either buying physical gold or gold futures. Most people don't go out and buy the futures directly, they're not participating in those markets directly. So when people are out buying gold, that's usually what they're doing. It's either in the physical form or through a fund. Now, as far as the price change this year, it's certainly done really well. Um, and I would just encourage people to keep in mind that gold's just like any other investment. There are going to be periods where it does really well, and there's going to be periods where it does really poorly. And like all investments, it's important for a consumer, whether we're talking about stocks or gold or Bitcoin or anything else, that we don't want to put too much of our portfolio in one thing. We don't want to be concentrated in one thing. So even though gold's done really well, and an investor might be thinking like, wow, I should be buying some gold, it's important to not just sell everything you have and buy gold with all of the proceeds, because we don't want to add unnecessary risk to our portfolio by being overly concentrated. It's better to, as the saying goes, spread our eggs across multiple baskets. So gold's doing really well right now. Of course, no one knows what it will do in the future, but it's like, the numbers are what they are. You had them there, and it's certainly done well. But there are also periods where gold has done really not very well when compared to the stock market and other assets.
And generally, gold does well and not well in what circumstances? Obviously, it's a natural resource. I mean, it's there. We know that. But when does it not do well in periods of what? And when does it typically do well?
So gold's a safe haven asset. So when people are nervous about the economy, gold tends to do well, because there's sort of a mentality of, well, even if the economy has a disaster, at least I'll have my gold, and my gold will be worth something. And that's usually more of the people that are buying physical gold. I certainly see and understand that argument, and those are, we've had a lot of angst this year with the tariffs and economic and fiscal issues and all of that, and I think we're seeing just a flight to some of those safe haven assets like gold, where people just feel a little bit more comfortable than investing in some more risky assets like stock market or something else.
Yeah, and it's interesting because we know that the stock market has had some ups and downs. We also know gold has had some ups and downs. So I think that's really important to note, that gold maybe isn't as steady and solid as people may think it is. I mean, we just saw right there, a $1,200, $1,300 swing in just the last couple of years. So I thought that was really notable. Any last word on gold? I mean, is there maybe have it 10% of your portfolio if you have it on gold and precious metals? Is there some sort of rule of thumb for gold and precious metals?
Yeah, one thing I definitely want to add on that is, when you look at the historical volatility of gold, which in our profession we use a statistical measure called standard deviation, but the volatility of gold is actually really similar to the stock market. So it's important to keep in mind that gold is a very bumpy ride, just like investing in stocks is. As far as how much of your portfolio you should set aside, every investor is different, and I can't make a recommendation for just everyone out there, but in general, anything over 5 to 10% of your portfolio, whether it's gold or any other asset class, when you get above that, you start to sort of have an outsized risk of something unique happening to that particular asset or asset class that the rest of the portfolio really can't compensate for. So I think 5% for most people is probably a reasonable number. 10%'s a little up there, and above that, uh, you know, buyer beware, I guess.
Yeah.
So, but the broader thing is, your portfolio should be a mix of all sorts of different things, and as long as you're doing that, then really the percentage weighting of any one piece should be at a reasonable level.
Finally, just kind of the last word on the economy right now. You had mentioned there is some angst, whether it be people buying gold, whether people getting out of the stock market, whatever it is, there is some angst out there with tariffs and everything that you had just mentioned, for the reasons that you had just mentioned. So a final word on advice for consumers about the economy, and maybe something happy to end us on here. I know we've talked a lot about, but just reassuring people.
Well, the economy's gone through a really wild ride the last 5 years, coming out of COVID, and then we've had all this fiscal stimulus, and our debt has grown, and there's lots of changes happening, and it's rightfully so. People are worried, and I think a really important thing to remember is that the economy goes through these cycles all the time. We've had tariff issues in the past in the United States. It's a new thing now, but it's not like it's never happened before. It has happened before. We've been there. And the important thing to remember for most people is that each family You have your own unique set of long-term goals and circumstances that are important to you and your family. And no matter what's happening currently in the market or in the economy, you really want to have a long-term focus, whether you're trying to pay for college for your kids, or you're trying to retire comfortably, or maybe take care of an aging parent. These are all things that are not going to be decided by, this decision or that decision day to day, but those little decisions that you make, they do compound over time. So it's really important to keep a long-term focus, to not make rash decisions based on, no offense, Dave, but based on headlines that come across the screen, because those can really have, obviously an emotional impact when you see something bad in the news and you look at your portfolio and it's gone down. There's a natural tendency to want to stop the bleeding, to make that go away. But you also have to remember that your goals are much broader and more important than what the market's doing on this particular day or the next day. And so you really have to keep the long-term view in mind, whether that's a 5-year goal, a 20-year goal, a 50-year goal. It seems really important now, but looking back, it's really hard to remember what the government was arguing about 30 years ago or 20 years ago. But everyone wishes they would have invested something more back then. And 30 years from now, people will feel the same way. So I think the best advice that I could give to everyone out there is to just not lose sight of your long-term goals for your family, whatever those are. That is the most important thing that you can do.
Phillip Mock with 1522 Financial. Very well said. Thank you very much. And I hope we'll have you on again. This has been really great. This is our first time doing this interview, so I hope we'll have more of these. Phillip Mock, thank you so much.
Thank you for having me, Dave. Have a good day.
Yeah, absolutely. So that was great. Phillip Mock with 1522 Financial, local financial planning here in Tulsa. We so much appreciate his time. And I think, he makes a good point, is that we are not trying to scare you as part of my focus on Your Money Matters and finance, and really just getting into that financial world as I really have this last year and focusing my reporting on that, is that I wanted to know more about what's going on and to kind of sift through the sound bites from both sides and both parties and different people and candidates and the Fed chair and everything, and kind of sifting through this and seeing, what does it mean for my pocketbook? What does it mean for my bank account and savings? And just like Phillip was talking about, what does it mean for my long-term goals? I want to retire at 55, at 60, at 65. I want to retire right now and spend time with my grandchildren and my kids that are out of state. All these circumstances that we've been talking about, I'm trying to relate what we're doing on the news and bring in experts and talk about everything in a perspective and everything in a context, because that is so important. It's a big world with a big economy, a lot of things going on in this world right now, and this lever gets pulled and then this thing pops up, and then this lever gets pulled and this thing's pop up. So all this complex global economy, it's too big for any of us, one person, to think about. So just talking about grocery prices and eggs and retirement, and is gold a good idea, and what does it mean to invest in gold? I really hope that you got something out of this conversation like I did, and hopefully a few things. It's going to be exclusive here on our News on 6 digital studio, our streaming desk as we call it. It's going to be up on News on 6, this whole conversation. We're at about almost about a half an hour right now, so this is going to be all up on newson6.com. It's on our YouTube page as well. Eventually, we may start doing podcasts. We'll get back with you on that, but a lot of different media so you can consume this however you want to. Thank you for joining us, and we will see you again soon. Again, I'm Dave Davis with News on 6. We appreciate your time watching this. Have a great day.
Thank you for watching this Oklahoma's own digital studio stream. Stay with News on 6 online and on television anytime for the latest news, weather, and sports.